So in the strategic metals, we have seen a trend downwards, actually. So lithium prices are down quite significantly.
Sources are telling us that, as you say, 2028 is now the launch target for an Apple EV.
In 5 years, most car sales will be electric.
I think it's time to accept that Tesla has been shot.
All that and more. So let's get to it. Tesla stock is up 1.5% in the pre-market, sitting at $212.45 per share. The Q4 2023 earnings call is today. Are we to see a run-up ahead of the earnings call, only for it to be sunk by comments of Elon Musk? Who knows what's going to happen to Tesla stock today? One thing you can be sure of, though, is it will be volatile as
what are some of the trends you saw to close out last year carrying over into the new year in precious metals?
So in the strategic metals, we have seen a trend downwards, actually. So lithium prices are down quite significantly.
Down, you say? I wonder if Tesla's long-term contracts for these metals that are down at the moment will play a factor in how much it costs to make the vehicle. After all, the battery is the most expensive part of the electric vehicle.
As well as rare earths and others. I think perhaps the exception has been graphite. We saw out of China some export restrictions, and that might have held graphite prices. But nickel is down, and many of the metals prices are down.
Very important for the United States to break their dependence on China when it comes to making battery electric vehicles and energy storage products. Capitalism should do this for us. Sometimes capitalism moves too slowly and Tesla ends up having to do things themselves, i.e. the lithium refining plant in Corpus Christi. Tesla didn't want to do that. They felt that they had to do that to meet their goals. In the years to come, if you involve yourself in this supply chain here in the United States, there's money to be printed. Well, money for those that aren't scared of a little hard work.
Luis, is this related to demand trends that you're seeing, or as you mentioned, some of what's playing out with China and some of the supply side?
It's a mix of everything, but EV demand has come down, but it's a cycle. So we will continue seeing I think overall the trend is going to be up, but then you'll see slowdowns, and this is what we're seeing. And as a result of that, we see the slowdowns as well, and significant decreases in the case of lithium in prices. But that's because the way sometimes these strategic metals are traded, many of them are stockpiled, large amounts. And then end users exit the market, and we see these slowdowns, these significant decreases in some cases, as I said.
A multitude of reasons why the prices of these precious metals are so low. Trying to pin this on an EV slowdown is pretty basic, but the good doctor here makes a valid point. It's kind of cyclical. EV demand appears to be slowing at the moment, but the trend is clear, and it's up.
Yeah, it's basically a scaling back of what Apple planned to do. Sources are telling us that, as you say, 2028 is now the launch target for an Apple EV.
2028? What the f could it possibly be? That this is not as easy as Tesla makes it look?
It had been 2026, but they're also rethinking what that product looks like. Sources are saying that they want to do something which is more lower level of autonomy. Think level 2, something more akin to Tesla's current capabilities with autopilot.
They're working on something akin to Tesla's autopilot now for 2028? That don't make no sense. Now, I've got the first robo-taxi fares occurring for Tesla in Q4 of 2024. That may or may not happen, but can you imagine what Tesla looks like in 2028? Tesla won't be able to make all of the battery electric vehicles that the world is going to need. Just a lofty goal of about 20% by 2030. Now, if Apple can carve themselves a bit of this pie, well-known brand, great software, maybe they'll have great cars too. An autonomous Apple car coming to market, well, that just puts more nails in the coffin for Legacy Auto. As Elon says, in the future, all cars will be electric, all cars will be autonomous. At least Apple is driving in this same lane.
Tesla has been cutting prices on cars. Investors have been cutting Tesla's stock price. You bought Tesla last year when it was cheaper than this. I think you bought some more, a good chunk, a little bit more than a week ago. Do you keep buying it as it goes down if it continues to go down this year?
I got this one, Cathie. What's the phrase? Be greedy when others are fearful. Be fearful when others are greedy. The fear is quite high, my guy.
If you've watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading Tesla at the margins. When it is soaring and everybody's excited about the good news, as we move towards electric vehicles, we will take profits. And likewise, as investors and traders begin to fear that we're going to be in an air pocket, we've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric.
Could you say that again?
In 5 years, most car sales will be electric.
Most car sales. I wonder if that is just above 50%. Are we talking about like 2/3? I mean, I think my models have us somewhere around that 75% realm in 2028.
And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down in price. Tesla can price down. It can price down if we're in a weak spot globally, and it does appear that we are, certainly China and Europe, and even here in the United States.
Let me challenge you there with what Hertz just did, backing away from EVs, saying, yeah, I mean, people really love Teslas. That's not translating into how much Teslas cost to repair and maintain, and the viability of them maintaining a fleet. So I understand that you're trading around it now, but for the people at home who don't necessarily do that day by day, where's your even mark? Where if it goes below here, that's when you're really pushing into it, leaning into it.
Well, we cannot talk about what we are going to do prospectively, but just to address Hertz. There is a learning curve with EVs, and I think a lot of people go to Hertz and say, I'm going to try my first EV, and they learn, okay, if you're going to drive 50 miles or 100 miles, you've got to start thinking about charging. So a bit of a learning curve. It is true that the repairs cost more, but maintenance also costs 60% less. So there's a bit of a trade-off. If you listen to Uber, on the other hand, Dara will tell you that they're encouraging more of their drivers to rent from Hertz and others because the drivers get more. Uber's take rate is not more, so it is really beneficial for drivers, and consumers love them. They're willing to pay up. So, when innovation is evolving and the infrastructure is moving into place, but not quite there, especially in terms of repairs, you're going to go through fits and starts like this. But the trend is undeniable. Okay.
When I'm getting a rental car, I'm going to Hertz, mainly because they have Teslas, Model 3s and Model Ys now. Maintenance, next to nil, almost nothing. Fortunately, I've never had to repair anything major on my Teslas. The limitation on parts, sensors, the gigacasting, all of that stuff together, if you have a major accident, liability's not gonna cover it. You're gonna want some really decent insurance.
And then there were 6. Ooh, that's how I'm feeling about the magnificent ones. The 7 stocks who reminded people of the fabulous movie where 7 of our most bad gunfighters went to Mexico to save a village from some cynical, vicious bandits. But that little Magnificent 7 moniker may have reached the end of the line, because alas, not all 7 are still magnificent. I think it's time to accept that Tesla has been shot. Not unlike Harry Locke, the first gunfighter to go down in the movie. And we either need to rename the group, or perhaps the Super 6, maybe, or search for a replacement. Get a 7th. Yep, on a sedate day where the market, was Dow gained 138 points, S&P advanced 0.22%, both to record highs. NASDAQ climbed 0.32%. I think it's time that we think for a magnificent reshuffle. And I don't do this easily, because you know I respect the work of Elon Musk.
Bullshit!
I respect Tesla. First, why does Tesla have to lead? beyond the creative license of cinematic analogy? Well, how about because it was at $299 in July of last year, and now it's at $208? Maybe because it's worth $663 billion now, well off the trillion-dollar goalpost that we want these companies to have, or at least as tilt to? Doesn't help that Tesla stock has fallen 16% year to date. By comparison, standout NVIDIA, well, look at this, 21%. The other 5, they're all in the black. Look at these numbers. Look at that number. It says it all. Or maybe in 2 days, when Tesla reports, we'll discover that the electric vehicle business has peaked and the solar business isn't going to make up for it. In the last few months, we've seen a host of ailments to the Tesla story, and it's gotten harder and harder to turn a blind eye to them. We ignore it, but we shouldn't anymore. Flagging sales in China versus other Chinese manufacturers, BYD, overtaking them as the largest electric vehicle maker in the fourth quarter sales. Possible U.S. saturation, a boutique pickup truck that is only going to challenge the F-150 in sales anytime soon. And let's not forget the declining value of the cars themselves, as we learned from Hertz, which owns a huge fleet of Teslas. It's an untold story. It's one that deserves more press. These electric vehicles are not keeping their value the way that we thought they would.
Oh! I love Jim Cramer's energy. I absolutely love it. You heard the man. He doesn't want to remove Tesla from the Magnificent Seven, but do it. Do it. Tesla doesn't need to be in a group like JT and NSYNC. It's time to go bye, bye, bye. Justin Timberlake didn't need a group. No more than Tesla needs to be in the Magnificent Seven. All I can hear is... And I'm going to continue to load up on as much Tesla stock as I possibly can. Instead of just chalking it up to the irrational behavior of the stock market, Jim Cramer has decided to disregard all of the positive things that Tesla has done, despite the stock cratering from 52-week highs. Record-breaking Q4, Model Y best-selling vehicle in 2023, the maturation of FSD, the growth of Optimus, the burgeoning energy division, Tesla making money hand over fist, new product launches, product refreshes. It's cool. It's cool. We'll just go ahead and remove them from the Magnificent Seven. Let them go solo. Don't put them back in there, though. Don't put them back in there. In conclusion, the price of precious metals has dropped significantly. Is it directly linked to the EV slowdown that's occurring? I wonder who's going to benefit the most from these lower prices. Perhaps it's the company that's making the most electric vehicles. Apple scales back their self-driving ambitions and their electric vehicle. I've said it before, and I'll say it again. This is as easy as Tesla makes it look. According to Cathie Wood, and I tend to agree, most car sales in the next 5 years will be electric. And an end to the Magnificent Seven? Say it ain't so. Tesla's recent dismal performance in the stock market has Jim Cramer thinking Tesla doesn't deserve to be there. And you know what? He's right. Tesla is its own beast. The stock market doesn't believe Tesla to be a trillion-dollar company, let alone the prospect of it being a multi-trillion-dollar company. It's in a class all its own and probably should be treated as such. That's all I have for you today. Be easy. Peace.